There was a good article in the Wall Street Journal. Cash is all that matters. And to that point, there was a great quote from the head of financial research at Renaissance Macro. His name is Howard Mason. He said, "We don't have a flight to quality. We have a flight to cash." And so I think, Ben, you said this earlier. At this point, people are using treasury bonds as an ATM machine, which is...
And bonds really front ran this thing. They were prepared. They already priced in a recession with the huge decline in rates that we had. So now I think everyone says, okay, what's my source of cash right now for either other investments or commitments or just for spending purposes? And that's been treasury. So you've seen bonds sell off in the last week or so, and pretty hard too, especially on the long end, because they went up so much.
Look at this chart from Bianco Research. Jim Bianco puts out a lot of great stuff on Twitter, showing the price versus NAV of the long bond TLT from iShares. It's trading at a 6% discount, which is by far the lowest it's ever been. So people are just using anything to sell, and I think this is a good reason why markets shouldn't close, because people need to use the market as a source of funds. What if you're living off dividends? What if you're living off interest? What if your business goes under and you have a portfolio of stocks and bonds you need to tap? Like, we can't close the market.
And when the market closed in World War I, was it 1914 it did it, or 1915?
Yeah, it was June or July to December.
It wasn't nearly the type of market that we have now. The products didn't exist. Most of the people weren't involved in the markets. The investment world wasn't nearly as mature. So that's not a very good comparison, because it didn't really matter as much. Then I agree. Right now, if you shut down the markets, a lot of people that's just shutting down their sources of cash in a lot of ways, and they need this stuff.
So a lot of strong opinions everywhere, obviously. And on TV yesterday, you had Bill Ackman having an absolute meltdown is the only way that I could describe it. And I'm not discounting. I'm not pointing fingers. He might be right. But he seemed pretty hysterical that if the government doesn't do everything they need to, I think he said this is the end of America as we know it. So pretty strong feelings there. And then, yeah.
So you talked about how on the other side of this, people are going to want to take off. I think there's also going to be a cohort of people who get stuck behind, and they're going to get so stuck in the negativity, in the pessimism, this is bad and it's never going to get any better. And that happened in 2008 to a large degree, and I think there's still some people who never came around after 2008, even during the recovery. You're going to get a lot of people like that who are going to go into that bunker mentality, and they're going to be stuck there, and they're not going to come out, and they're not going to realize that we've moved on, and we're going to recover, and things are going to get better. Those people are going to be stuck behind. So I'm trying to caution people, don't get stuck following these people who seem like they're right now because they're the most negative.
Right.
Those are not the people that are going to get you to the other side of this.
And by the way, Ackman was actually also saying that he's buying stocks. And I don't know if his mentality is, listen, if the world ends, like, whatever. But at this point, so yeah, just please be careful getting stuck in that mentality, because it's a dangerous one and it's a seductive one. And I understand. I understand that things are scary right now.
There are some rumors going around. This is on Twitter, so take them for what it's worth, that a lot of the big hedge funds are now starting to see problems. And it's probably not only because of their investments, but because a lot of people are just coming in and saying, give me my money back. I don't want it in there.
Well, we'll get to that in a second, because I have some data here. But and then you had Bill Miller on TV saying that stocks were cheap. And, of course, people are rolling their eyes and showing the video from 2008. Obviously, he was in The Big Short talking about how Bear Stearns he's buying. And at the same time, simultaneously, Bear Stearns was going out of business. So don't there's nothing there. Just because he was wrong once, I wouldn't listen to him. I'm not saying that he's right. I'm just saying it's easy to scoff, but don't pay attention to that. And then lastly, this morning, Ray Dalio was on CNBC, pounding the table on his 1930s stuff, which he's been doing for years now. Maybe he's right. But I think that we will come out of this, and one of the ugly things about coming out of this is, unfortunately, I think this is only going to widen the wealth inequality even further.
So you don't think that – I was almost going to take that another way. You don't think that the rich are the ones getting hurt the most by this?
I mean, absolute.
I guess everyone's getting hurt.
I mean,
but
on an absolute basis, yeah, they're losing billions and billions of dollars, but who freaking cares?
Yeah.
Because it hits Main Street a lot harder than it hits them. So I think that this is time. We bailed out Wall Street in 2008. I think it's time to bail out Main Street in the most serious way possible.